Hey everybody, Jeremy here, coming at you with the weekly market bias update for Sunday, June 25th for the trading week ahead. Diving right in, we are looking at the advanced issues, declining issues difference, hashtag, or excuse me, $ ADD. This basically shows how many stocks per day were advancing on the day or declining for the day. Obviously, we had a pullback in the market in the S&P and NASDAQ over the last week. So you can see here each day there were more and more stocks declining in value as opposed to gaining in value. That should be no surprise. Going out to the AR high low indicator, this shows how many stocks are making new higher highs for the previous month versus new lower lows for the previous month. So when we are bullish, we want to see this above 50. When we are bearish, we want to see it below -50. Right now, you can see we are right in the middle here. I'll clear my alerts there so you can see it. We had been previously bullish. We had a pullback in the market, and now we are in this kind of neutral zone. Going to the S&P real quick, and then we'll bounce back to that chart. We had said last week that we were really overextended and we needed a pullback in the S&P. We have got that. We are now currently fighting to maintain the 9 EMA on the daily chart. This is going to be a very important battle. If we do end up rolling over here, next stop down would be 4340 for support on the daily or 4300 for support on the weekly. So going back to the AR high-low chart right now, we want to see a pop back above 50. And that basically says the net difference of stocks in this indicator that is tracked are gaining and setting new highs over the last month. So we want to see that increase and go back above 50 to remain our bullish posture. If we do see this roll over and drop below, it's not going to be the end of the world for just a day or two, but we don't want to see it remain below. When we get 2 consecutive closes below that -50 line, that is kind of our signal to maybe take some profit off the table for longer term positions, to start looking maybe for bearish delta in our portfolio for short-term swing positions, or to just start looking or leaning more bearish in general, maybe buying some puts, things like that to protect our overall portfolio. So going back to the S&P, we had that pullback. I want to look at the weekly real quick to show you we are still pretty overextended on the weekly chart. I wouldn't actually mind continued pullback into the rising 9 on the weekly chart down at 4,300. I honestly don't know if we're going to get that or not. This has been a nice orderly pullback. We saw our volume indicator here decreasing in volume very steadily, and now it is just kind of hanging out at a low there. So if we see a pop in volume and a nice green candle come in here, that will be our trigger in. And if we go in, we have 2 different options. For aggressive traders, you can see kind of a double bottom support here forming at 4381. So aggressive traders could actually trigger in here around 4410 above the little pivot high here on the intraday chart. For more conservative traders, you're going to want to go out and actually trigger above the high of these previous 2 candles, and that comes in around 4427. Hopefully we get another day here just kind of hanging out between that zone within the body of Friday's candle. I would love that, mostly because it would let this rising 20 period moving average catch up and play support and act as support up here. Similar on the NASDAQ, we'd wanted a pullback. We got one on the daily chart. We are again still overextended on the weekly chart, and you can see that on the RSI here. We are still overextended. We did get a similar volume pullback on the NASDAQ, although not as much. People weren't really willing to take as much profit here. So anyways, overextended, need to see some consolidation still. If nothing else, another day or 2 within this range below 15,238. And I'm just going to say, even though I have an alert here below the low of today, really staying above the low of 14,964. So anything within this little range right here. If not, if that does break, it'll be a quick trip down to the rising 20. And then on the weekly chart, we are still fairly extended. It's 1440. excuse me, 14,480 is the rising 9. I would love a pullback into that. We don't usually stay overextended from these rising moving averages for very long. You can see back in history here, every time we got overextended from it, we consolidated neutral, let it catch up, got overextended, pulled back into it over and over again. So we are still very much in overextended territory. That's going to make it hard to take new bullish trades, even if we do get triggers here. If you do play that, I would suggest going intraday and taking intraday aggressive triggers and being also very aggressive on your stop placement. Don't let it roll over on you if you do end up triggering in, because there is still room to the downside here. Going out to the Russell. The Russell's a different story. It actually picked up momentum on the downside, broke its rising 20, and is now kind of battling for support just a little bit above its 200-day moving average and all of this consolidation zone back here. So as long as this stays above its 200 moving average, I'm not really worried about it. It needs some time, though. I'm not really interested in a V-shaped recovery. This drawing and this drawing here were the drawings that I put in last week on our market bias recap, and I said we need that continued pullback. And I'm really targeting somewhere around like 630. So basically at the end of this week, we're going into the following week is when I'm going to be looking potentially for trades here. And until then, I want this to do nothing but go sideways. Let these moving averages come down and converge again, give us some support, and then rock and roll. If we do get some extended consolidation in the Russell 2000 here this week, the following week, I would be looking potentially for another bullish play. We can ask the market for what we want. We don't always get it, but we'll see. Rocking out to crude light. Really nothing to see here. Still just choppy mess. I'm not going to waste our time on that. Looking over to Bitcoin, it is holding and consolidating right at its previous pivot high here on the daily chart. And if we go out to the weekly chart, had a massive bullish candle with volume, and it is not actually overextended on the weekly chart. Its MACD looks good. And on the daily chart, also have room to the upside still. So I'm kind of anticipating another day or so of consolidation, maybe 2 days of consolidation. Honestly, the longer the better here. I would love to see this 9 catch up and act as support around 30,000. Who knows with Bitcoin, though, it has a mind of its own. It has had a lot of news for new institutional investments and things coming in, new crypto exchanges with large money from institutional investors backing it. So if that does pan out and we get some more positive news on this, this thing could just rip and take off without us. But ideally, for a good entry, we want to see that rising 9 come up and act as support. Same thing basically for Ethereum. It has a little bit of catch up to play. You can see it's actually quite a ways off of that previous pivot, whereas Bitcoin is fighting against that and trying to break out. So we need to see a little bit of development here, but I like a potential catch-up trade in Ethereum, something breaking above 1940. Again, I would love to see a few days of consolidation here first. Going out to gold, obviously in a downtrend right now. There's some geopolitical news events going on. There's some interesting stuff going on in Russia. And I say interesting, you know, obviously we never want to take war and violence for personal gain. It's not something that we ever want to condone or anything like that, but it does impact the markets. And as traders, we have to be aware of that. And it is our job to profit from certain situations that arise. We can expect some volatility coming in gold here. I don't think that there is enough confirmed news coming out of that yet to be able to make a trade one way or the other. So I'm just going to be watching gold this week and waiting basically for a break back above our diagonal resistance here, or for a deeper pullback to be able to buy down here at the lows around 1875. Going out to natural gas, we've been talking about natural gas and saying we were looking at this bottoming pattern for weeks and weeks. We've had numbers of surges here, had a big surge here, and none of these had sticking power. Now we have a change of character here, and this is very, very important. Change of character. We had that surge, pulled back into that support channel, and then stuck it, and we are now moving forward. That is confirming our bottoming pattern. This looks like it has some significant room to the upside. So natural gas is definitely an area of the market that I'm going to be playing this week. The futures is pretty volatile, although I do play it occasionally, but UNG is the ticker symbol for the stock, for people that want some exposure to it in the stock world and don't want to play the larger risk profile of the futures. So anyways, giant bullish candle here on Friday. And looks like it has some continuation to the upside. I would like to see it break up above $7.72 for new entry. Or you can drop intraday and play any intraday pullbacks for a new entry on that. Finally, last but not least, let's go out to silver. I'm actually liking the play here in silver. It is obviously in a downtrend, so this would be considered a counter trend trade, which is not recommended for anyone that is new to the markets, but for anyone that is maybe a little bit more adept and knows their risk management rules a bit better. This actually on the weekly chart is showing a nice bullish retracement into a longer term support. But on the daily chart, it is in a bearish downtrend, lower lows, lower highs, lower low. So we have conflicting time frame analysis here. So anything that you play, be quick to take profits on. If I do play this, it'd be either a day trade or 1 or 2 days, just waiting to play a bounce back into about 23. So that wraps it up, guys. I will leave it there. Last thing outside of the charts, just looking at economic data coming up. Monday, nothing to see. Tuesday, consumer confidence report. I'm not expecting this to move the market too much one way or the other right now, mostly because most of the market sentiment has been so bullish lately. I can't imagine that 1 week over from last week, we would see much of a drop there. Fed Chair Powell speaking on Wednesday, and I don't think there's anything there that we're going to see necessarily moving the markets. He's been pounding the higher for longer. He said already last week that we will probably have a couple more rate hikes by the end of the year. So I don't think there's anything new coming out of the Fed chair here this week that's going to move the market. Unemployment claims, I think, will be important this week, and also core PCE price index. So Thursday and Friday are the two news events that I'm personally tracking that might impact the market. So I hope that helps, guys. Enjoy your trading week. As always, let me know in the comments if you have any questions, or hit me up on Facebook or Instagram, and I can help you out. Talk to you soon.